Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May, and this is Getting Started with Technical Analysis. And Thinkorswim has a brand new technical indicator, never available before on the platform. So today is going to be a guide to trading stocks with something called the anchored VWAP. And to some of you, that's going to sound very familiar. We actually reviewed the VWAP, the technical indicator volume weighted average price, just 2 weeks ago. It's available on YouTube as an archive. But today we're going to be taking a look at a variation on that theme. I think it's going to be a great discussion. It's actually an indicator that can be used on a longer term charts, whereas VWAP is really designed to be used kind of intraday. So it should be a great discussion. Before we can get to that, let me say, first of all, hello to everybody out there in YouTube land. Hey there, Kevin and Carlos, Gina, Frank, TM, David, PBG, Paul, Scott, Jack, Robert, everybody else. Thanks for joining us week after week. I really do always appreciate your attendance and your contributions in these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on those YouTube archives after the fact, if you're just watching the recording of this webcast, enjoy the presentation, but be aware that you're invited to join us in the live discussion if you're so inclined. It kicks off 2 o'clock Eastern Standard Time on Tuesday afternoons. And as a final heads up before we dive into things, my very good friend Lee Bowl is going to be hanging out in the chats with the live stream audience. He's going to be answering, any questions that are on target for this discussion that I can't get to during the presentation. So thanks for being there for me, Lee. So let's get into it. And the very first thing that Lee and I would like to do is issue an invitation to you. If you're not following us on X, or that platform formerly known as Twitter, please do that. Lee's already posted our Twitter handles in the chats. But for the sake of the audience that's watching on the archives, at Lee Bowl, BOHL CS is Lee's handle on X. Mine is at Cameron May CS, and that's the best place to connect with me in between these live streams. All right. Now, as we get into this, first thing that we also need to do, another thing that we need to do is to pause to consider the risks associated with investing. Risks are real, they are significant. Remember, even though we're not talking about options today, options carry a high level of risk and are not suitable for all investors. Any investment decision you make in your self-directed account is solely your responsibility. Having success with your paper money account is not a guarantee that you can have success with your real funds. As market conditions do change, and they can change rapidly, Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right. So with all that said, let's set an agenda for today's discussions. 3 things that I would like to cover. First of all, just exactly what is the anchored VWAP. So I'm going to spend a few minutes. I'll try to keep it to under 5 minutes discussing how the indicator is built. It'll be a little bit heavier lifting, not really truly necessary for the potential application of the indicator. We want to spend the bulk of our time discussing how the anchored VWAP might be used for planning and trading stocks, right? And we're also going to be using, as a third step, current examples to illustrate these concepts. So hopefully by the time we're done, everybody's very familiar with this brand new indicator just introduced to the Thinkorswim platform over the weekend. Okay, so let's go right to Thinkorswim. And to start our discussion, let's use Apple. Right, so let's add this brand new indicator. We're going to come up to the Edit Studies icon, click on that little flask icon. And as we did 2 weeks ago, we're going to type in VWAP. VWAP, again, that's an acronym for volume weighted average price. And that's going to limit the number or the potential studies here to just those that contain VWAP within the title. So there we have the now familiar VWAP. And if you need to see the archive for that discussion, just go to our playlists on YouTube. And if you haven't subscribed to our channel yet, it's going to help you out. Subscribe to Trader Talks on YouTube, our Trader Talks channel. But that's where you can find our playlists. All right. But you might want to look for me and for VWAP. You can also just essentially do a keyword search on YouTube for Cameron May VWAP. Anyway, but for today's discussion, we're going to select anchored VWAP. And this one I think is going to be exciting for all those who have learned about VWAP and you think, well, that's nice, but it's really just using intraday information. What if I wanted to use a similar indicator, but for not truly long-term, but for longer-term stock trading? maybe planning for trades that are going to last for several days to several weeks. Now, that's not long term, right? That's more swing trading or shorter term trading, but it's longer than just the intraday examination of the VWAP indicator. So now that we've selected anchored VWAP, let's click apply. And what we're left with should be 3 lines that, if you understand VWAP, this is almost already going to make sense. So let's talk about our 3 lines. Just as with VWAP, we have a purple line, which represents conceptually, quote unquote, average price over a given time frame. So just with the intraday VWAP, what the trader is looking for is, our price is currently above or below average since a certain time in the past. Okay. Then we also have 2 other lines. We have an upper line and a lower line. Those are, again, 2 standard deviation lines. Let's turn our focus to the purple line again and just quickly revisit its construction. All right. So this purple line really is intended to represent a sort of a moving average of prices over time. Now, a lot of you are going to be familiar with a simple moving average. It looks at average closing prices over a given period of time, 10 days, 50 days, 200 days, or so on. And it plots those lines on, or those values on a chart, connects them as a line, and then we can see average change in values over time. Now, this is similar, but it introduces a couple of elements that are not covered in a traditional simple moving average. Number one, there is a volume element. With a simple moving average, it just looks at closing values over time and gets an average of those. Doesn't care about which days had the higher volume, which days had the lower volume. They're all equally weighted. They're all equally as important. With the volume weighted average price, volume is important. So here's that equation again. There's actually 5 steps to calculating this purple line, the volume weighted average price. Okay. First thing we do is we calculate the average price of the first candle on our chart. Now, since we brought up a 1-year chart, you'll notice our 3 lines are converging back here at the beginning of the chart. That was February 6th of 2023. So that day's candle, we get the average price of that candle. So with a simple moving average, we'd actually just look at the close and hope that it closely enough represented the average price for the day, I guess. But with VWAP, we're going to look at that average price and calculate it in this way. It's not just the closing value, but we take the high of that day, add to it the low of that day, and then also the close, high, low, and close, add them together, and divide the final value by 3. Yeah, Chris B, looks like this anchors at the first bar of the chart. It does. You're exactly right. Yep. Now, doesn't that sort of beg the question, well, what's so significant about the first bar of the chart? February 6th of 2023, was there something big going on that day? Is there some reason why this indicator should be anchored to February 26th or February 6th of 2023? Maybe not. We're going to be talking about when and where a trader might choose to anchor this indicator. Okay. Robert says, I think this is the one that Ken Rose had requested. He had one created that had to edit the start date every time. Yeah, Robert, and actually we do still edit the start date. That's very typical in the application of an anchored VWAP. But I want to talk about when one or where one might select that start date. Okay. But first of all, let's talk about the calculation of the line. So the first thing we're doing is calculating the average value. Okay. Yeah, so give me just one moment. We're just going to quickly check something here. Yep, looks like we're good. All right, so we calculate that beginning value, that average value of that candle. So again, incorporating more than one data point, not just the closing value, but the high, the low, and the close for that day, and get the average there. But then we're going to assign a comparative importance to that candle versus other candles according to how much volume there was on that day. So step number 2 is to multiply the average that we just determined by the candle's volume. Okay, so if there was a lot of volume on this day, that candle is going to carry a greater weight in the calculation of this average. If there was light volume, it's going to carry a lesser weight. Now, step number 3 is we divide. And by the way, this second step, let me do one little additional clarification there. If we take that average price and we multiply it by volume for that day, we get what's commonly known in VWAP talk as PV. Now, I need to go back and remind myself what PV actually stands for. I always think of it as the period value, the value of that candle. Does that make sense? So once we've added in the volume, now we have the comparative value of that candle. All right, now we're ready to move on to step number 3, which is to divide that period value by the total volume since our anchor date. There we go. So if we're just doing the very first day, the total volume and that day's volume are going to be the same. As we move on to day 2, now we have 2 days worth of volume. We add those together, and that gives us our total volume since our anchor date. And we just continue that forward, 3 days, 4 days, 5 days, adding all those volumes together and dividing the portfolio value, the position value by that volume. Okay? Has kind of a smoothing effect. Step number 4 is to calculate, well, it's kind of from here, just sort of lather, rinse, repeat. We calculate the next position value for the next candle, and then we add that new position value to the previous position value and divide that by the running total volume. Okay, so all of this adds up to taking average prices, assigning relative weights according to how much volume, and following those values over time. And that results in this purple line. Does work very similarly to, but significantly different from a moving average, a simple moving average or a weighted moving average. But you can see why this is called a volume weighted average price. Now, this typically is constructed on an intraday chart, and it typically starts at the beginning of the day with the first tick of the day in that first minute. So there's a common anchor point. It's always the first part of the day. Now that we've moved out to something longer than a daily chart, this could be applied to an hourly chart. It could be applied to a weekly chart, but we're going to be using a daily chart for our example. We need to anchor it somewhere else. And by default, this is just going to anchor to the first candle of whatever time frame that we've selected. So do we really care about February 6th of 2023? Maybe the trader considers that to be technically significant, but the trader may actually, and Chris B, I know you kind of threw out this question. You noted that it starts right there at the start of the chart. Yeah. Is that where it should be anchored? That's kind of a loaded question, but there are some commonalities in the places where traders may anchor their indicator to start to look for how it might help with trading. Okay. So before I talk about the upper line and the lower line, let's talk about anchoring of the lines. There are a couple of ways that a trader might commonly anchor this new indicator. Okay. In other words, when I say anchor, where do we want the indicator to start? Now, one very common way is to look for a big event. All right. So there was a big event just a couple of days ago on Apple. On individual securities, possibly the most common quote unquote big event that's used by traders of the anchored VWAP is to look at earnings announcements. The problem is if we anchor to something that just happened 2 days ago, this indicator isn't really going to be saying much. It's only going to be operating on a few days worth of data. So I will say, as we're looking for an anchor point, a starting point for the indicator, we might want to look back at least a few months to allow this to accrue some data, and you'll see why what I'm talking about here in just a moment. But let's say we look back to maybe this earnings back in August. Let's choose this now as our anchor point. Now, Robert, you said that Ken had created this, but you had to go in and change the start date. Yeah, even with this now as a default indicator on TOS, one has, I'm not going to say that we have to, I'm going to say that we can, okay? All right, so let's anchor our indicator to this earnings announcement. So what date was that earnings announcement? As we point at that, you'll see that that was on August 3rd. So let's come up to our little beaker icon, and you'll notice as we're looking at this Edit Studies field, here's our anchored VWAP, and you can see that it says 2020, so 2020, 0101. That's January 1st of 2020. So it's stretching back to there. If we wanted to go back in time, it would just start at the start of whatever chart we choose back to 2020. But let's click on the little gear icon and change that start date. I'm going to click on the calendar here, and we can push forward by month using the small arrows, or we can push forward by years using the double arrows. So I'm going to click on the double arrows. There's 2021, there's 2022, there's 2023, and now let's advance by month to August and choose August 3rd as our begin date. That we could also, if I were to design this, I might have called that the anchor date. Okay, but let's click OK, and let's click Apply, and click OK again. There we go. So what we've just done is we've anchored, maybe it's helpful. I mean, you can see where the lines are converging, but you can see that we've anchored our indicator to start on this date. So what do we do with it? Now that we understand how it's built, now that we understand how it might be anchored, and we'll talk about a couple of variations of different anchor points, how might it be used? Well, we have our purple VWAP line. And the VWAP line, because it's very similar to, again, as I mentioned, significantly different from, but similar to a moving average, it's also commonly used as support or resistance. So there are times if price is coming up from underneath this line, it might act as a price ceiling. And a trader might expect prices to fall from there. On the other hand, if we break decidedly through that line, or we're already above it and coming down to it, it may act as a support area. So the trader conceptually may be looking, if we're bullish, to be trading, to be entering as we're breaking up through or bouncing just up from our line. That's one potential way to trade this bullishly. Or we might employ our other two lines. So guys, you already know what these other two lines are. If you've seen my VWAP presentation, what are they? I've even mentioned it. These are standard deviation lines, okay? They're actually positioned, there's one that's positioned 2 standard deviations above our anchored VWAP line, and there's another line that's positioned 2 standard deviations below our anchored VWAP line. So what is standard deviation? I always struggle with this because I'm not a math teacher. I understand what standard deviation is, but it just makes sense to me in my head to actually verbalize it. I can struggle a little bit. But basically, what it's doing here is it's looking at a period of time and trying to capture about 95% of all the data for that time. So 2 standard deviations represents, if this is average or the mean, how far does the price tend to depart from that mean or that average before it returns back toward the average, either up or down. If we wanted a 95% probability, where would we draw an envelope around our current average to try to capture if we go up or go down? How far is the furthest it's likely to go before returning with a 95% probability? That's two standard deviations. A single standard deviation would be about a 68% probability. So that's what we're looking at here. Whether one understands the standard deviation or not, what this is intended to do on Thinkorswim is to introduce potential areas of price resistance up here, a price ceiling, or price floor down here, price support. Now, I also want to point out, if you were to look at anchored VWAP on some other charting service somewhere else, you're not going to see these standard deviation lines applied. This is unique to Thinkorswim as far as I can determine. And but therefore, how might one use it? Well, just think about. Well, this is the way that traders very commonly think of the VWAP or the anchored VWAP. This line is intended to represent sort of a normal condition. I got to throw that in air quotes because normal is a very subjective term, right? But over a period of time, this has represented average values. And if we get a long way from average values, long way being determined by two standard deviations away, maybe there will be a snapback effect. If we've gone quite a ways below that average, maybe that might attract value investors who see short-term opportunity to start driving prices higher. If we get a good distance above that average, maybe that might incline some to start taking profits and drive prices back down. Those are the concepts there. Okay, so I know there are going to be some questions here. Let me quickly look over. Oh, by the way, there is a survey in this in the chat right now. So for those attending the live stream, if you would do me this favor, click that survey link right now while the chat is live, and that'll just populate the survey on your screen. You can just park it for after the webcast is over. But our surveys, they're important to us, and they're very quick. 2 multiple choice questions, and then there's like a comments box and a suggestion box. You know, what would you like to see in future webcasts? Any other comments you want to make? So even if you just click the 2 buttons, that data helps me. I just promise you, if you take the time to fill out my survey, I'll take the time to investigate that data, to read through your comments, and it helps. It's never a wasted effort. Okay, so that's enough for the pitch for the survey. But for your questions, how candles are made versus reading candles. Okay, Leona, that's a great question. We'll talk about candle analysis in a future webcast. It'd be too far to go off topic in this discussion. Can we choose the anchor directly on the chart, Mr. Market? No, it's actually done through this up here. But one thing that we want to do is find our date first using the chart. Then just go up and plug the date into the calendar field up there. Jody says, can we see standard deviation on price time period depending on the chart we are using? Well, Jody, you can see that this is 2 standard deviations. How do I know that it's 2 standard deviations? Well, right up here, you can see it says anchored VWAP -2 standard deviations, +2 standard deviations, and it shows me my date up here that I've chosen as my anchor, 2023, August 3rd. All right, other questions? Question directed to Lee, so I'll leave that. Skylo says, I've always viewed the standard deviation as if you looked at the chart on its side and placed a bell curve on it. That's a great way to look at it. Yep. This is effectively a bell curve, right? With maybe the bulk of the activity happening at or around, at least conceptually, in this case, our anchored VWAP, and maybe our long tails are out here or out here, right? Yeah. Great way to look at it. Thank you. All right. So we've already talked about how a trader may look at anchored VWAP for potential entries breaking up and through average. Maybe that momentum is going to carry us up toward an upper extreme, or if it's pulled back down to average and starting to rise again, that can potentially act as a support area. But also if we get significantly in air quotes, but as defined by a 2 standard deviation departure from that average, for some traders, they might see these levels as potential entries. Okay, and they may choose to exit if they get back up to that average. When we are below a moving average, of simple moving average, an exponential moving average, a triangular moving average, a volume weighted average price, What do we think it might be as price approaches that from the bottom? It may be a price ceiling. So trading from a two standard deviations below to enter a bullish trade and getting back out as we get up to that average, that's also potentially tradable, right? There we go. So Chris says, looks like a blown signal in mid-October. There are definitely going to be some of those, Chris. Absolutely. Let's see, mid-October. Are you talking about right here? As we're pushing up and through, maybe a trader thought, oh, I'm going to get in, maybe try to sell as we get to that second standard deviation, and it faltered. We got a bearish engulfing right there, and we pushed right back on down through that moving average or through that VWAP value. Yeah, blown signal. Yeah, we might just call this a failed signal. So in this case, the trader may have a plan to get right back out, try to limit the downside if it turns out to be an invalidated signal on this example. Yeah. So is this a perfect indicator? Of course it's not. I will ring the bells for you the day I discover a perfect indicator out there. Haven't found it yet. Okay, so we've talked about the construction, we've talked about the potential application. I want to give a little bit more time to potential anchor points. Yes, big events on individual securities may be anchor points. Another way that a trader might anchor their anchored VWAP is to look for just major turning points, again, probably more than 3 months from the current day. Okay, so that might have been just right here in late July. Let's pop back up here. Let's actually clean up our chart. I'm going to go to one of my drawn items, right click on that, and let's just clear up that whole drawing set. So you're going to take off all the ovals and all the lines that I've drawn. And let's re-anchor this. Let's see, what was the highest point right there? That was on July 19th. The highest date more than 3 days in the past. We could also, 3 months in the past. We might also look at anchoring it at this low here, but let's do this high for now. So that was July 19th. So how do we put in that as our anchor date? We go up to the little edit studies icon. Here's our anchored VWAP. We click on the little gear icon and change our date using the calendar. So click on the calendar, go back to July, choose the 19th, click OK, click apply, and we're good. So from here, same concept. The moving average may act as resistance areas. As a resistance area, it may act as a support area. And departures up to 2 standard deviations might be resistance. Departures down to 2 standard deviations might be support, or in other words, ceilings and floors. Trading from floor to moving average is one, or to VWAP. Trading from VWAP to resistance, or the 2 standard deviations is another. So how about we do this then? Let's go through a series of stocks, but instead of going in and picking an anchor point, how might we standardize an anchor point across a series of stocks? Wouldn't it be kind of a pain if you're looking through a whole watch list and you've got to go in and find a date, move your anchored VWAP anchor point? Move on to the next stock, you've got to find an anchor point and then go in and move it on the date. Well, for that reason, some traders may actually choose an anchor point from a major index. Because if the S&P, for example, is showing a major reversal, let's say from a downtrend to an uptrend, hitting lows, or from an uptrend to a downtrend, hitting highs, that anchor point may have significance across a broad spectrum of individual securities. So how about we switch things up here? Let's actually take off our indicator, because I like to give a little bit of repetition to my audience. So to take that off, we can just come up here to the edit studies icon, click little X, click apply, click OK. Let's switch things up. We don't even need that left column anymore. Let's go to the S&P 500 and look back over the last few months. We could anchor to this low, we could anchor to that high. This is relatively close to what we've been doing. How about we look at the high? Looks like that was July 27th. All right. So, oh yeah, Chris B is saying maybe closer to November 1st. I'm going to go with this one, but Chris, we could anchor it here as well. And I'm going to talk about a signal that may cause one to move the anchor, make it a little bit more current. Okay, but let's start with this one back here. Let's go. So let's see. I just want to remind myself, July 27th. Okay. Now, interestingly, we don't use this on indices. As a matter of fact, it shouldn't apply. I haven't even tried it on an index yet, but I would guess that it wouldn't even apply. Let's come up here. Let's type in VWAP, anchored VWAP, add that, apply. Okay. Yeah, it's not on the chart. But let's go to our individual stocks. Let's just go back here to maybe our watch list of S&P 500 companies and start with Apple. And now let's edit that. Click on and I could have edited it on the SPX, but let's edit it here. Click on the little gear icon, date, move it to 2023. Let's move that to July and go to the 27th. And click OK. Click apply. Why am I using July 27th? Because that was a fairly major reversal point from an uptrend to a downtrend on the S&P 500. Let's click OK. And you can see, did that coincide fairly well with the high on Apple? Did it have implications for individual securities? Yeah. Why? Well, because the S&P is a function of individual securities. It's an expression of. Yeah, Kevin, I could do that. I can't talk about those here, but yeah. Anyway, but from here, same analysis. Trading from lows here to our VWAP, or from VWAP breakouts up to standard deviation highs. How about we look at some other stocks? Let's look at, what about Alphabet? Let's see, has our 2 standard deviation rule held? Up or down? There are times when it doesn't do a great job. There are other times when it does a really good job. Now remind me, don't let me wrap things up. When we get a strong breakout above the upper standard deviation line, and we're not going to see very many of these just because of the strength of the markets. If we were to get a strong breakout below the lower 2 standard deviation line, that may cause an anchored VWAP trader to take some additional action. Okay. So Akil, again, good question. I don't discuss that in this series though. Okay. All right. So let's go back. Let's go on to onto another stock. What about Amazon? Here's our anchor point according to the S&P 500. There's a 2 standard deviation up to a high. Would that have maybe been a good time in retrospect for a trader to take some shares off? Possibly, yeah. As we get down to lows, that may signal that there might not be much downside left in the stock, at least conceptually. Maybe not so much risk, maybe more potential reward. This case looks like we rallied up to and just touched that average, came back down, touched our 2 standard deviation line again, back up to the average. In this case, we moved through and straight up to the 2 standard deviation line. Interesting. What about NVIDIA? Yeah, you can see, boy, NVIDIA just traded right between that 2nd standard deviation on the downside and the 2nd standard deviation on the upside. But then, this is what I want. Joe, do you like this one? Okay, well, this is, believe me, not a sales pitch for the anchored VWAP. I wanted to talk about it because it was brand new. I want to be first to bring it to you guys. But it's just another potential tool and an enormous toolbox, right? This is just an examination of what it is and how it might be used in the trading of stocks. Okay, but there are going to be times where we're trading kind of neatly between our 2 standard deviation lines, and then we break out. You see that right here? We've seen a lot of these recently. Let's see if we see more. Yeah, there's Meta breaking out. Do we see more? BRKB breaking out of that standard deviation line. Yep. When we see this sort of behavior, let's see. Let's just go ahead. BRKB, that'll probably be serviceable. When we get a big white candle taking us through an upper 2 standard deviation line, that may be a signal that the stock is just prepared to move faster, move higher at a faster clip. And if we're still relying on information from 6 months ago, maybe we need to update that. So at this point, a trader may look at, okay, what's a more recent anchor point? I think there could be an argument for a couple here. There's the very most recent low right there, or there's also one back here. How about we look at this one? For BRKB, let's look at maybe December 7th. I'm going to come up here. Let's change our date to December 7th. And this is going inside of the last 3 months. When the stock is moving very rapidly, it may be necessary to edge this within the last 3 months just to allow it to keep up essentially with current price activity. Let's click OK and click apply, and let's see what we get here. Yeah, very interesting. So yeah, it did trade between our 2 standard deviations and our VWAP. And here again, it's starting to break above, and it's using that upper line sort of as a support. So guys, let me see. CL says, isn't AVWAP, which is actually the acronym for this, and I'll see if I can fit that into my video title, applied at the top or the bottom of a candle, but there's no such option in this Thinkorswim indicator. So CL, no, it's not applied to the top or the bottom of a candle, because it actually uses the entire candle height just to begin the AVWAP. So that first candle, we look at the high, the low, and the close, get an average, weight that average, and then determine where that VWAP is going to start for that candle. So yeah, so you'll see it starting somewhere in this, not the center, but between the high and the low of that candle. Good question. All right. Do we want to look at, we have time, do we want to look at 1 or 2 more? Let's nudge this back to July 27th, that reversal point or maybe let's experiment with the S&P 500. Come back here. Chris, you were saying maybe here toward the first part of November. Looks like maybe it was late October where we hit that low on the S&P 500. That was October 27th. Could we try anchoring it there? Yeah, let's do that. Let's go on to, now let's go to LLY. And let's change our anchor date to October 27th. I need to go the right direction here. October 27th, click OK, click apply, and let's see what this has done. Yeah, a lot of these stocks are moving so rapidly that while initially they've sort of adhered to the 2 standard deviation expectation, we've really started to move outside of that. If we start to see that again and again and again on a bunch of stocks, that's just sort of put an exclamation point on just how strong the markets have been, particularly on specific securities over the last 2 or 3 weeks. What about Tesla? Tesla's been getting beaten up. Tesla is kind of an example to the opposite extent. We're breaking down below that lower 2 standard deviation line. AVGO, it's sort of trading up toward the upper band. Okay. In any case, guys, I think we've covered it. I think we've kind of beaten this one up. When I kicked things off, I knew I had this brand new indicator that was going to be new to some of you. It's new to Thinkorswim. It's not entirely new to the world of technical analysis. So I just wanted to make sure that we understand what the anchored VWAP is, how it's actually custom on Thinkorswim with those 2 standard deviation lines. You're not going to see those elsewhere. We wanted to talk about how it might be used for trading stocks. And then we went through a series of charts to sort of drive home the typical application of this indicator. If you've enjoyed this discussion, and I really hope you did, make sure that you're taking advantage of the other resources outside of just this webcast. First of all, if you're not following Lee and me on X, please do that. So Lee's handle here on X or Twitter, whatever you want to call it, at Lee Bohl, B-O-H-L, CS, at Lee Bohl, CS. My handle is here at Cameron May, CS. And this is where I come to post, my thoughts on current market conditions. Just recently, I posted a chart of the S&P 500 and said, hey, Twitter followers, what do you think this 2-day candlestick pattern appears to be? And what might it imply for the S&P 500? And it's already, we've had a lot of comments on that. And it allows me to have a more personalized interaction on a daily basis when these webcasts are not currently underway, which is actually only a few hours of my week. So yeah, if you want to connect with me or Lee in between the webcasts, make sure that you're following us on X. It doesn't cost anything, and it's just a great resource. Then the other thing, make sure that you are subscribed to our Trader Talks channel. Some of you already have. So if you've already clicked subscribe, that's fabulous. If you haven't subscribed, go down below our little display window here and click on the black subscribe button right now. Or you can find us on YouTube afterward. Look for Trader Talks, Schwab Coaching Webcast. That way you know that you have the right channel. Click subscribe, but that's where you can find these live streams, and you can find the archives for the live streams under our playlists. And it also helps our channel out. Doesn't cost anything, helps everybody. So it's a great thing to do, right? Really good resource. Everybody, time for me to let you go, though. Thank you for giving me your time today. I'm going to do one more thing off here on the YouTube on my side, on YouTube on the side screen. Yeah, 37 people have already clicked the thumbs up or the like button. Thank you for doing that. That to me, I always describe it as that's applause to me. It's always appreciated. If you want to show your appreciation, if you want to help us out, click that like button. And I'm saying that to my live audience. I'm also saying that to anybody that's watching on the archive. Click the like button. That's really appreciated. We track those metrics. It helps the channel out and lets your instructors know that they're doing a good job. All right, everybody, thanks for giving me your time. Go enjoy the rest of our educational offerings through the rest of the day. I will see you in a future webcast. I'll also look for you on X. But hey, whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.